Hey everyone, welcome back to your weekly market outlook. This is for the 12th of February 2024. Let's take a really quick look on last week. So we do have comments coming out from the RBA. They kept rate unchanged at 4.35%, but comments coming out from the RBA is that they are prepared to hike interest rates should it need to. And that kind of put it onto more of a neutral hawkish tone. And not really too much of a mention of that drop in inflation in Australia. So we're really looking at a little bit more on the hawkish side on the RBA. I wouldn't say it's more on the hawkish side. I would say a little bit more on the cautious hawkish side coming up from the RBA. Other than that, last week's unemployment claims, the weekly unemployment claims came in a little bit lower than what the market is expecting at 218,000. That's still a drop from 227,000. So that's kind of in line from the previous employment numbers that we had from the US. I think the this month's number in terms of February numbers, which is going to get released in March, I think we are probably going to be looking at a little bit of an improvement as well in terms of the employment numbers should the weekly unemployment claims continue to go down every week. Other than that, it was a pretty quiet week. For this week, the focus would definitely be on the CPI numbers tomorrow, but just a quick note, the Asian market will likely be a little bit quiet. We have the Japanese market closed for the spring holiday. Obviously, Chinese New Year has rolled in, and China is going to be on holiday pretty much for the whole week. So we don't actually have much coming out on Monday. On Tuesday, the CPI numbers, obviously this is really important because market is expecting a huge drop in terms of the inflation number from 3.4% to 2.9%. This is a 0.5% drop on the inflation. So again, let me put a cautious note here that market could again be overestimating that the inflation could really cool off very significantly. But what if the inflation number doesn't come in as expected? What if the inflation number comes in still above 3%? Obviously, that's going to be a case for a stronger US dollar. So there's actually two data to watch out for. This week, obviously, the inflation number is one. The second one is actually the retail sales number from the US, which is going to get released on Thursday. Again, the retail sales number is expected to drop from 0.6% to negative 0.2%. This is, again, a very aggressive anticipation of a drop in inflation, right? Although there are arguments for this. What if the inflation doesn't cool off? What if the inflation is still about 3%? What if the retail sales didn't drop as much as the market is expecting? This could actually backfire from what the market is attempting to price in. So a market is attempting to price in for a weaker US dollar, but if there's any surprise upside on this two number, it could actually be the opposite. It could really boost the US dollar significantly because the market is already attempting to price in for this softer numbers this week. So that's really more on the point for this week. So we got that two data there for the US CPI numbers as well as the US retail sales number. Australian employment numbers is probably not going to be a huge impact. The Wednesday UK CPI number, if we take a look at the UK CPI number, the expectation for this one here is that the inflation is expected to pick up from 4% to 4.1%. So I think this is more in line with in terms of how the global inflation should be looking. And I think the pricing in for the US CPI is currently a bit too aggressive for 0.5% drop. We might still maintain a position about 3% for the US CPI number. So just keep that in mind because the UK CPI number here is expecting the inflation to pick up from 4% to 4.1%, right? Other than that, we also have the PPI numbers, which is going to get released on Friday, but yeah, that's pretty much it. Tomorrow, we have the US CPI number. Wednesday, we have the UK CPI number. And then on Thursday, we have the UK GDP numbers, which is very much going to impact the market. And then we have the US retail sales number, which is going to be on Thursday. PPI probably wouldn't be that huge of an impact. All right, so let's move on to the technical. So we have completed a head and shoulder pattern here. This is on the Aussie USD. This is on the daily time frame. And this has been building up since November. We finally have that break below the neckline last week. So you can see that it's drawn here. This is a very symmetrical head and shoulder pattern. When we broke that right shoulder there, when we broke that neckline, there's also a bearish flag pattern to kind of confirm the momentum is still pushing price to the downside for the Aussie USD. So for now, in terms of major resistance for the Aussie USD, that will be at 66 cents. In intermediate resistance, that's going to be at 65.50. We do have support coming in at 65 cents, but I think the major support would actually come in at about 46.75. In terms of how far price can actually go, we do have a couple of projections. Number one, we're definitely going to be looking at an immediate push towards 64.50. Below 64.50, we have 64 cents, and then ultimately there's a potential for this one to drop even lower towards 63 cents on the Aussie USD. Now for the Euro USD, this one here, we did break lower. We have transition below the Ishimoku cloud, just like the Aussie USD. But there's actually one more swing low here. That's located about 1.0730, 1.0725 there. That swing low is likely going to be broken. And if that swing low is broken, then we are likely going to confirm a major change of character on the Euro USD. That would actually confirm that there's actually a potential reversal for the Euro USD in 2024 and at least in the coming months there. And if that happens, if we break lower and we have that confirmed close below 1.07, we have support at 1.0650, 1.07 range. But once we break below that change of character that we are anticipating on the Euro USD, we could potentially push even lower for the Euro USD. So we got a stronger support at 1.0650, 1.07. But below that, we actually don't have a significant support until about 1.05 on the Euro USD. So this one here, we have transition below the Ichimoku cloud. We are likely going to be looking at a potential reversal, a major reversal on the Euro USD for 2024. Against all the key levels here, that's really holding this up is that swing low that we see there, which is the December low. That's about 1.0725. Any confirmation of a close below that low, that would be a change of character on the Euro USD, and we could potentially drop down even lower on the Euro USD. Now, next up is the Pound USD. As I previously mentioned, for the Pound USD situation is a little bit different. We are now back inside the Ishimoku cloud. We haven't transitioned below the Ishimoku cloud. In terms of projections of where we're anticipating that support for the month of January, we've been talking about 1.2550, and that level has proven to be the level where people are actually taking profit for the Pound USD, and where we actually see a little bit of a demand at 1.2550. There's an order block at 1.25 to 1.2550, and that was mentioned in previous week's outlook, and this is also where price has actually bounced off last week. So we're now back above 1.26, but we're still within the Ichimoku cloud. In terms of the momentum, the RSI is currently a little bit flat there, and you can see the price is still being capped by 1.2650. Major resistance, obviously 1.27 is still going to be act as a major resistance, but in terms of immediate support, that would be at 1.26. Any progress below 1.26, that could actually see price push lower back towards 1.2550. Major support is located at 1.25, 1.2550. Breaking below 1.25, we actually don't have anything significant until 1.2350 and 1.23. So definitely keep an eye out on the Pound USD. Currently, this is still range bound because we still have support that we still have support where price kind of bounces off from. But once we break below those support, which is 1.25, 1.2550, there's actually not a lot to hold the sterling. Now, lastly, we have the dollar Japanese yen. The dollar Japanese yen, we also previously have mentioned at the beginning of the year, change of character twice. So the small-term trend, medium-term trend, that has already shifted. And in terms of where pricing is right now for the month of January, we have actually seen a little bit of a pullback towards 146. And last week, we did a break of structure. So currently price is pushing a little bit higher. We have broken above 149. In terms of where this is likely going to go, we're still aiming for that 150, 151, and ultimately towards 152, where the resistance 3 on the weekly pivot is currently located. Support wise, we have support at 147, 148, and below that, obviously, we still have that 145, 146 range on the dollar Japanese yen. So with that, good luck to your trades, and I'll see you soon.